friend of mine who's a trader called me and he said, I've been sitting counting on the software and I think it's 72 weeks, but could you just check? And so I brought up my charting package that has a bar counter. And I said, holy smoke, how did I miss that? Yes, it is 72 weeks now.
Welcome to Traders of the World, the only show fluent in the native tongue of the market. Join me, Flávio Lemos, on Traders of the World as we decode the global conversation. Stop guessing, start understanding. But I'm not alone. I'm thrilled to be joined with a veteran who started his journey in 1998 trading institutional derivatives across New York, London, and Brazil. He is the official voice of the All Brooks method, leading a community called Portal Price Action of over 50,000 members. He is the country's premier authority on pure price action. Felipe Aranha. Hello, Felipe. How are you doing?
Hi, Flávio. Thank you for inviting me here. The host you are bringing today is someone that I am a big fan. I love your show. I love the success you are making in so many languages. So thank you for having me here. It's going to be a pleasure to join you again.
Let's discover that in a minute. But before we start the sacred ritual, if you enjoy this conversation, hit that like button and subscribe immediately. Trust me, you need to hear this because our guest today is an absolute superstar. In Brazil, we had a former president, Dilma Rousseff, who once made a very confusing speech. She said, I don't think who wins or who loses, nor who wins nor loses. We win or lose. Everybody will lose. For years, we laughed at that. It sounded nonsensical. But today, sitting down with one of the world's most aggressive high-stakes traders, I realized she might have accidentally discovered the holy grail of the stock market. If you try to win all the time, you go broke. The secret isn't winning. The secret is knowing how to lose. He's the man who turned 30,000 into 1.3 million in a year. He risks 3,500 per point. He's the author of the global bestseller, Best Loser Wins. So, Tom Hougaard, welcome to Traders of the World.
Thank you very much.
So, here's the plan. Grab your coffee, make it a double, and focus, because today's episode is going to challenge everything you know about winning. Strap in, because right after the intro, we are going to open the Pandora's box of Tom Hougaard's mind, where the best loser takes it all. You can't afford to miss it. Don't go anywhere.
You ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
So, Tom, let's start with the hard truth. We are raised to be winners in sports, in school, in business, but the title of your book is Best Loser Wins. You spent a decade at City Index seeing the order flow of thousands of retail clients. You saw people with high win rates, guys who were right 70% of the time, still blowing up their accounts. So, why is trying to be a winner the fastest way to go broke? And what does it actually mean to be a good loser in a game designed to trigger out our flight or flight response?
That's a good question. It's a really good question. When I began to observe the behavior of active day traders, it came as a surprise to me how some of these traders could have hit rates of in the 80s. Maybe the percentage isn't so important as to say that these were the guys that would make money day in, day out for months. And then one sunny Friday afternoon, gone. Lost it all. And it became a pattern that I saw in all our clients. I would say of the 100,000 clients that I witnessed over 9 years, nobody truly, except for a handful, nobody truly understood the nature of trading. There's a famous saying in the UK, sorry, in the English language, that goes, let the shipwrecks of others be your guiding marks. And I began to think very deeply about the nature of trading. Before I got to that point, I think I was just like everybody else. It might have been everybody else back in 2000. And in 2026, the formula has changed. Back then it was moving averages and Fibonacci. Today it's liquidity drain and probing and algos. But at the heart of trading, nothing has generally changed. It might be machines that are spurning the trades faster than we did before. But at the heart of trading, nothing has really changed in the last 10 years, in the last 20 years, in the last 50 years. It might be that the moves come faster now. It might be that the ranges are bigger. But at the heart of it, profitable trading is still the same. And as somebody who then worked at a trading desk, and I don't know if your viewers or if you know what it's like to work at a trading desk. So let me give you an idea. You're basically at the epicenter, and you'll have people around you that will shout at you, you're getting 50 Dow, you're losing 30 Nasdaq, you're getting 100 FTSE, you're losing 90 DAX. And it is your job to, and as ridiculous as it sounds, we sat with a little plastic pad and wrote, all right, so now I am long 500 Dow, now I'm short 400 DAX. But of course, any business will tell you that they want to optimize their profit. And that's the heart of any business endeavor, is to cut your overheads and make as much profit as you can. It's a basic principle. It's 101 business. And at City Index and other brokers around the world, there was a growing trend where broker owners would look at their client performance, and they would look at the hedging policies that the broker undertook. And they realized that if the broker could tolerate larger swings in their profit loss, the broker, not the client, if the broker could accept that there would be days where the client would win, if they could accept that, then the probability of the client eventually losing all of it with interest was disproportionately high. It wasn't a 50-50 bet. It was more like 95% chance it's going to happen. I remember very clearly the first time that I became accustomed to the software that the brokers employed, because they began to separate clients into categories. And you have to understand that what I'm telling you here is insider knowledge. And it might not be pleasant to listen to. The first time that I was accustomed to this software, it was explained to me that we will put the account holders into different brackets. If their account was less than $1,000, let them trade as much as they want, because there was a 99% chance that they would lose everything. If they had slightly bigger accounts, especially if it began to get above, say, $10,000, then they would be categorized as still let them trade, but keep an eye on them if they really get on a roll. Well, you have to understand that, and this is a very important point to make, because I'm not criticizing the broker for doing this, because at the heart of it, the broker is the conduit between the trader and the market. But of course, the broker wants to make as much money as possible. You can't fault a broker for doing that. And we're not talking about manipulation, not at all. The client traded at fair prices with good bid-ask spread. And yet, somehow, the market managed to always take everything from them. They might go on great profit sprees, but eventually they would give it all back with interest. And I sat and I watched that for 9 years. And I thought to myself, every single one of our clients knows about Fibonacci, knows about volume spread analysis, knows about footprints, which was emerging at that time, knows about double tops and double bottoms, knows about Bollinger Band, knows about Keltner channels, knows about you name it. All of that information was available to the clients. The clients was as equipped as they are today. And yet even so, they never really managed to make anything. And that triggered something in me to understand, why is that? And I came not to, it wasn't a la-la moment. It was a progressive journey into understanding the human mind when it's under stress, when it's bored, when it is under duress, which is same as stress, when it is seeking dopamine, when it is fearful. You started talking about Pandora's box, and stay tuned. I don't know if you know the tale of Pandora's box, but if you open all Pandora's boxes, what's the last thing that you'll find in Pandora's box? Is hope. We have this saying that hope dies last. And that is a detrimental attitude to have as a trader. You know, hope is not a strategy. It's a bit of a cliche. But the point that I evolved with, the point that I worked with and have ever since I left trading in the city in London in 2009, has been a progressive journey about understanding myself as a trader. Understanding why, under certain situations, it would trigger things in me that was adverse to my trading performance. And I want to give you an opportunity to ask as many questions as you wish on this, but I quite like to give you some examples of what I am referring to. Why don't we do something which is very present? About a week or so ago, one of my personal heroes is a free climber called Alex Honnold. He free climbed a tower in Taipei called Taipei 101. And it was broadcast on Netflix all over the world, live even. I don't think there's a human being that could sit and watch that performance without getting clammy hands and perspiration under your arms. Because
I said, this guy is totally crazy.
you see, he's not. He's accustomed. And so when you trade big size, it's exactly the same process as trading small size. But if you don't build a framework for yourself to increase your trading size, you'll never really explore the boundaries of what is capable for you to tolerate as a human being. Alex Honnold says, I think very beautifully, I'm not afraid because I've been doing it for so long. And so if I put on a 200 lot live, I'm not afraid because I've been doing it for so long. But the irony is that you actually have to have the mindset that pushes your boundaries, because boundaries don't get pushed by themselves. So you have to have a very active, goal-orientated mindset to explore what is possible for you to tolerate. The best that I can explain is every single one of us present here, the three of us, we're no spring chickens. We have a few years on the clock, and well, I'm sure you drive a car, I drive a car. But just because I've been driving a car for the better part of 35 years does not make me a good driver. I know that I'm not a good driver. Why do I know that? Well, because about a few years ago, a friend of mine gave me a birthday present. And the birthday present was a day on a racetrack with a professional race driver. And so I sat in a sports car, and I own a sports car. And the sports car I sat in was very similar to the one I own. But now it was being driven by someone who knew how to maximize the performance of a sports car. And I nearly peed my pants. That's how fast we went. And I can say hand on heart that I was truly scared when he took that car into a corner. And then it occurred to me a story that I wrote about when I wrote Best Loser Wins. Back then, I wasn't so familiar with Alex Honnold, but I had studied the work of a line dancer called Charles Petit. Now, Charles Petit, he became famous in 1973-74 when him and his crew shot an arrow with a wire attached from one of the World Trade Centers over to the other. And then they suspended a wire between the two towers. And it was probably 1974, at some month, I don't remember, when Charles Petit danced across the two towers on a line. It was captured in a movie called Man on a Wire. That in itself is a great story. But when I saw that, I asked myself, how did Charles Petit build up his nervous system to to climb at 1,700 meters up in the air, or 1,700 feet high? And I found an old grainy black and white video of Charles Petit practicing in a field outside Paris. And the wire was this high above the ground. And then later in the video, it was this high. And I found that somebody with a dedicated mindset, with a target-orientated approach to wanting to grow the depth of what is available, or in our case, trading size, it will not come by luck. It will come by effort, structured effort, very targeted effort. And I don't know if you know this, but I started writing Best Loser Wins shortly after I left to trade for myself. Best Loser Wins is actually not a book that I had any desire to publish. It wasn't meant to be a book. It was a requiem for a trader that wanted to stay alive and prosper so that he didn't have to go and work for somebody else again. And so it became an interactive, immersive depiction of the struggles that I had to overcome to be where I am today. That was the nature of Best Loser Wins. And then somebody saw it and asked me to submit it to a publisher. And when I submitted it, it was 300,000 words. And the publisher said, that's way too much. And so I had to cut it down to what you know of it as 80,000. I hope that answers your question. I know it, perhaps I have skirted around certain issues of why are people impatient, why are they the way they are. But what I hope my answer describes is, how do you actually grow your trading size? Because there's not much fun being right when you're trading one lot. It's a lot more fun to be right trading a 10 lot, and then a 20 lot, and then a 100 lot.
No, your answer was great. And I will tell everybody now, this show will be live 1 week before the event in Brazil. So everybody could come live to see your panel at Expert XP at the end of March in Brazil. So just invite everyone in a first notice of the event. So, Philippe, your time now.
In your opinion, what's the great defeat of technical analysis? And the failure in trading is more about technical incompetence, or is an inability to process pain, uncertainty, and risk?
Thank you. So, why does a technical analyst pour fire on the very thing that he relies on? I rely on the chart to guide me. Well, in 2018, there was a regulatory change in the broker environment all over Europe. The European super regulator, called ESMA, mandated every broker had to put on the front page of their website how many of their clients were losing. And the answer was that there was barely a broker in existence where 75% or more of their clients didn't lose money. When I saw that data, I realized that even though we had made great strides in the understanding of technical analysis, even though that the charting packages today were so much more advanced than the charting package I started out with, even the professional charting packages that we had 20 years ago on the trading floor. You know, the charting package that I sat and watched in 2005, I don't think anybody would accept that today, because it just wouldn't be good enough. And yet, even though that we have the most pristine data available, charting packages where we can construct our own EA, we have every ability to manipulate data to our heart's desire. Even so, the loss rate as of today in the industry is about 80%. That means that out of every 100 clients, 80 of them lose money. And I'd probably say that the last 20, they're break even.
And that's publicly, that's still publicly in the European websites, right?
Yeah. So the question I then ask myself is, if everybody had access to Discord channels, to YouTube videos, to the Al Brookses and the fill in the blanks, all of these gurus all over the world that are showing you all their entry strategies, all their techniques, all of their, always after the fact, of course, always hindsight, never in real time, but always after the fact. Even though we have access to all of that information, it hasn't moved the needle at all. Not at all. Since 2018, when the data first became a mandatory requirement for brokers, that needle has not moved, Felipe. It is still 80%. Doesn't matter that we are consuming YouTube videos and gurus and books like never before. Even my own book hasn't moved the needle. Why is that? Well, what is the lowest common denominator? Is human behavior. And so my argument is that it is deceitful to believe that you're a losing trader because you haven't consumed enough YouTube videos, and you haven't consumed enough Al Brooks books, or you haven't consumed enough inner circle trading, or you haven't consumed enough Bollinger Bands or Keltner Channel or moving averages or the latest and greatest in EA or AI. Because at the heart of it is you. And there's a reason why changing your behavior is so difficult. And it is structured in how our mind has developed. You know, if you look at human evolution, the brain at its fundamental core wants to keep you safe and wants to keep you pain-free. It means that when you are in a losing trade, your amygdala registers pain. But as long as you don't take the loss, there's hope. Pandora's last item is hope. And so it is the person that possesses a very particular mindset that wins. It's the person that wakes up in the morning at 5 o'clock and he doesn't negotiate, or she doesn't negotiate. She just gets out of bed and puts on the running shoes and runs. It's the person that says, I'm not drinking alcohol and nothing can sway me to drink alcohol. It's the person that says, I don't eat sweets because I put that away. It's the person that doesn't negotiate with the promises that they have made for themselves. And that is a rarity. In human condition, you have to appreciate that if this is the length of mankind's existence on planet Earth, if this is the length, our existence in modern technology is this. And so our minds haven't evolved with technology. It hasn't evolved with the financial markets. And so we're every bit as scared as we have always been. And the behavior is the same as when Jesse Livermore was a trader in the 1910s, 20s, and 30s. And the irony is, one of the greatest technical analysts was a guy called W.D. Gann. But it's widely recognized now that W.D. Gann, he wasn't a trader. He was a guy who sold courses. And to sprinkle it with a degree of mysticism, he quoted the Bible. And then to a very religious society as America, they bought that hook, line, and sinker. When somebody tells you that God has revealed the secret code and the secret vibration of the markets, you believe in it because nobody would ever question the validity of God. But it was nonsense then, and it's nonsense today. And so rare is the person who does exactly what they tell themselves to do. You know, I'm going to stop smoking on New Year's Eve. But why? Why are you smoking in the first place? Oh, I'm going to start running around the block on the 1st of January. Great, but why not the 28th of January or the 3rd of September? And I think human beings have a tendency to not truly understand why they're doing what they're doing. I have this exercise, and it is brutal in its efficacy. It's an exercise that I use to keep myself in check. I write down a question something that bothers me. Let me take you through a practical example that is relevant to trading.
Olá, espero que esteja gostando da entrevista. A Trade Brasil foi eleita por 2 vezes no Ranking Awards 2024 e 2025 como a melhor academia de formação de investidores do Brasil. E ela tem um presente para você que está assistindo esse podcast. 10% de desconto, é só usar esse QR Code que está aqui embaixo e a gente te espera lá, ok? Agora não esquece de dar uma moral pro Flávio. Curte, compartilhe esse vídeo e se inscreva no nosso canal, ok? Até a próxima e obrigado pela presença. Valeu!
Why are you tempted to add to a losing trade? Right. I sit down. It doesn't have to be, cross-legged with a candle. It's just I sit down and I set aside 10 to 20 minutes. And I ask myself the question. And I don't try too hard. I'm not thinking about it. I'm just letting my subconscious speak. Why do you like to add to a losing trade? Well, because I can get a better price. Why is it important for you to get a better price? Well, because I was wrong to begin with. What's wrong with being wrong? And do you see how I strip down the layers of psychological inference? My subconscious want to just give a relatively straightforward answer. But when I strip down layer by layer, I get to the ultimate truth. And the ultimate truth to that question was, I don't like losing. I don't like to be wrong. That is at its core, right? So you have a problem with being wrong. Yes, I have a problem with being wrong. Okay. Another question. Why do you struggle to add to your winning trades? Well, because if I bought at 10, it feels wrong to buy again at 20. Why does it feel wrong? Well, because if the market goes back, then I'll lose on my second entry. What's wrong with being wrong? I don't like losing. So do you see how you can strip everything away till you get to that core truth? And only when you have the core truth about yourself are you able to truly understand what your weaknesses are. And if you don't understand what your weaknesses are, you will not improve as a trader. If you keep thinking that the next Al Brooks book is going to be the one that makes you a successful trader, or the next chat room that you join is going to be the one that makes you a profitable trader, or if the encyclopedia of chart patterns is going to make you a profitable trader, it won't. It won't, because you haven't gotten to the bottom of why you can make money 9 days out of 10, but then you blow it all on day 10, just because you are caught on the wrong side of a big move. The Dow might be down 200 points and you're thinking, it's down a lot, it's cheap, I want to buy it. Great, fine. I don't have a problem with that, but have a stop loss in. And just because something is down 200 doesn't mean that it could be down 400 an hour later. And I found that when I worked those 9 years on the trading floor, it is the extreme days, it's the outlier days where people blow their accounts. People don't blow their accounts on the silver for the last 2 months. They blow their accounts on silver on that last Friday or last Thursday when the silver goes down 30%. Because they simply cannot fathom that the market can go lower or lower or lower. And I find that my training prevents me from blowing my account, not because I could have foreseen that silver would do what it did, but because I'm not afraid of selling something that is at its lows on the day. Why are you not selling the low of the day? Well, because it might bounce. What would happen if it bounced? Well, I don't like to lose. What's the problem with losing? I don't like to lose. And so, since none of us know what's going to happen next, it is far more important for us to spend time on actually dialing into who you are as a trader, as a tennis player, as a free climber, that it is to, whether you're wearing one kind of shoes or another kind of shoes, or wearing one, playing with one kind of racket or another kind of racket. When I tried to explain this concept to a friend of mine recently, who isn't a trader, he said, "Why is it so important?" And I said, "What do you do for a hobby?" He said, "Oh, I love to play golf." I said, "Great. Do you play professionally?" "Oh, no, I don't play professionally." "But are you good?" "Yeah, I have a handicap, I can't remember, 10. And I said, "Okay. So imagine that you're out playing with your friends on a Sunday, and you come to the 18th hole, and you are neck and neck with your friend, and you are deciding who's going to pay for dinner, and you have to make a 2-foot putt. Do you have any problems making that 2-foot putt?" I said, "Oh no, I'll win that bet every day of the week and twice on Sunday." And I said, "Now imagine that putt, your life depends on it. If you sink it, you live. You miss, you die. Does that change things?" "Oh, yes." "Why? It's the same putt." "Yes, but like Alex Honnold or Charles Petit, now I'm way up in the air." And that is the essence of trading. Every single one of us can make great trades trading at one lot. But you don't make a fortune trading one lot. You just don't. And so if you're a one lot trader, your mission in life should be to create 10 lots. And if you're a 10 lot trader, your mission in life should be to trade a 25 lot. And if you're a 25 lot trader, your mission should be to trade 100 lots. Now, obviously, there comes a limit. I can't push that limit anymore, which is why I trade with several brokers, because many brokers will not accept more than 200 lots at a time. But, there's ways around that. But it gets down to the point, gentlemen, where it just becomes an act of being in the present moment. You don't think whether you're trading 800 lots. You just don't. You think, what's in front of me? I don't think that Alex Honnold, 1,000 feet up in the air, was thinking about whether he left the fridge on or the stove on this morning. I think he's so engrossed in the moment. But he follows a very rigid structure. It's planned. Everything is planned that he can plan. I don't know what the market is going to do. And it don't need to either. So for me, the deceit of technical analysis is to believe that it's technical analysis that's going to be your savior, because it really isn't. And that's not a biased opinion. That's based on the fact that out of every 100 traders, all of which are using charts, 80 of them cannot make money to save their life.
Flavio, let me just say one thing. he told that during this convention, you remember?
I do.
He did, and L. Brooks was there. So he never meant to be disrespectful or anything to technical analysis or L. Brooks. It was always like some people think that they need to learn more, the next indicator, more about technical analysis. And there is a point, right, Tom, that is not about the technique anymore. It's more about looking to inside, right? If I understood correctly.
I've spent so many years studying technical analysis, and it never made me any money. I never made money from technical analysis compared to how much money and the fortune that I had built as an individual, knowing myself, knowing what my limits are. Also, I think that technical analysis is bland. It's like it tries to be everything for everybody. I find that mechanical entries suits me really well. I've developed some strategies that I don't sell as a course. It's just, you can download them. You can download the statistical foundation for it. But they have funny names like, first bar negative, school run, advanced school run, brunch break. But what they're really centered around is an understanding that I am not able to be fully focused for 6.5 hours. I can't. And dare I say, I don't think a normal human brain can stay absolutely committed and focused for 6.5 hours. So I find that my focus is great for the first 2 hours. And that came from constantly doing an audit of myself, Flavio. It wasn't just, I noticed that I would make money in the morning, but then I would lose it in the afternoon. And then at the time, my mentor, my friend, Dr. David Paul, he said to me, maybe you should stop trading in the afternoon, Tom. And maybe I should, but there was this part of me, as the identity of being a trader is that you show up at 9 and you don't leave until 4 o'clock. But actually, it's a silly argument to make, because I understood that if I could get the job done in 2 hours, why spend 6 hours? And so I began to just focus my technical analysis on the 2 hours. So I became an expert on what the DAX first 2 hours, because look, it's a bit like a chess game. The chess game has got 3 phases, at least that I am familiar with. You got the opening game, then you got the mid-range, and then you got the closing game. Well, the trading day is the same. It's not just it's full speed ahead for all 6 hours. You got the initial flurry of activity, and then things settle down. And so for me, it's about, well, how can I, as quickly as possible, make the money that I wish to make?
So about this, let's cut a little bit the story. You trade naked. You trade based on the clock. So can you explain a little bit how this school run strategy works? Why this window of time so magical?
Yes. So the school run is a strategy that came about from experience. I am watching a 15-minute chart of the DAX index. And I noticed that the first 15 to 30 minutes was very frequently a precursor to what really was going to happen. It was almost as if the first 30 minutes would be that the market is being pushed in one direction. And only until it gets there does it decide to continue or reverse. And so I developed an approach which brackets the second 15-minute chart. And if it breaks above, I buy. If it breaks below, I sell short. Under certain circumstances, I do the opposite. So if it breaks below, I buy, or if it breaks above, I sell short. And can I just point something out here? There's no secrets here. My research is publicly available, and when I trade live, I explain it very carefully. But I have found that my mind really loves the simplicity of that approach. Like any strategy, it has periods where it performs very well. So for example, when the volatility is high in the market, as it's been for the last 2 weeks, it's gold dust. When the market is calm, I have to be very careful to follow a breakout strategy, because it's much more likely that the market is just going to carry on overlapping. And so, being the person that I am, I constantly audit my results, and then I contextualize that into, right, I lost today. Why did I lose today? Well, because I thought the market was in a breakout mode, but it turns out to be in a trading range mode. Right. It's not like I could have anticipated that, or could I? Was it a big gap up? Was it a small gap down? Was it above previous day's high? Was it gapping below previous day's low? And so what I have done in my technical analysis, and which is why I'm saying the deceit of the technical analysis is to believe that technical analysis alone is going to save you. It isn't, not without having the mental fortitude to act in a way that doesn't come natural to you. So the two have to be addressed hand in hand. First, you come up with the approach. Then you come up with why are you not following your approach?
But you need to have an approach, right? Like
when I traded live at the Al Brooks event, I don't know if you recall this, but I lost on the day one.
I remember.
That's not a particularly nice experience to do. You're supposed to be this, not just it's full speed ahead for all 6 hours. You got the initial flurry of activity, and then things settle down. And so for me, it's about, well, how can I, as quickly as possible, make the money that I wish to make?
So about this, let's cut a little bit the story. You trade naked. You trade based on the clock. So can you explain a little bit how this school run strategy works? Why this window of time so magical?
Yes. So the school run is a strategy that came about from experience. I am watching a 15-minute chart of the DAX index. And I noticed that the first 15 to 30 minutes was very frequently a precursor to what really was going to happen. It was almost as if the first 30 minutes would be that the market is being pushed in one direction. And only until it gets there does it decide to continue or reverse. And so I developed an approach which brackets the second 15-minute chart. And if it breaks above, I buy. If it breaks below, I sell short. Under certain circumstances, I do the opposite. So if it breaks below, I buy, or if it breaks above, I sell short. And can I just point something out here? There's no secrets here. My research is publicly available, and when I trade live, I explain it very carefully. But I have found that my mind really loves the simplicity of that approach. Like any strategy, it has periods where it performs very well. So for example, when the volatility is high in the market, as it's been for the last 2 weeks, it's gold dust. when the market is calm, I have to be very careful to follow a breakout strategy, because it's much more likely that the market is just going to carry on overlapping. And so, being the person that I am, I constantly audit my results, and then I contextualize that into, right, I lost today. Why did I lose today? Well, because I thought the market was in a breakout mode, but it turns out to be in a trading range mode. Right. It's not like I could have anticipated that, or could I? Was it a big gap up? Was it a small gap down? Was it above previous day's high? Was it gapping below previous day's low? And so what I have done in my technical analysis, and which is why I'm saying the deceit of the technical analysis is to believe that technical analysis alone is going to save you. It isn't, not without having the mental fortitude to act in a way that doesn't come natural to you. So the two have to be addressed hand in hand. First, you come up with the approach. Then you come up with why are you not following your approach?
But you need to have an approach, right? Like
when I
traded
live at the Al Brooks event, I don't know if you recall this, but I lost on the day one.
I remember.
That's not a particularly nice experience to do. You're supposed to be this professional. And there I was, and I lost big.
And you were beside Al Brooks.
In front of 250 people, however many people there. There was a lot of people there.
Yeah.
But the following day, 150. The following day, everything worked for me. And unlike the rest who sat there and scalped, I just had my position. I added, because it was a trend move. There were people in that audience on day one that said, he can't trade for shit. On day two, when I made everything back that I'd lost, plus a whole lot more, people begin to get a different appreciation for the value of having a mindset that isn't just swaying in the wind. I did everything right on both days. One day I lost, the other day I won. So it's a 50-50 ratio.
Tom, I got to tell something about this. I remember in the day you lost, the first real-time day that you traded with Al Brooks in the stage. That night, the crew went to have dinner, and you usually go. And in that night, you said, I'm not going tonight. I want to concentrate for tomorrow. You remember that? You went to sleep early. It was like 7 p.m. or something.
Yeah. Look, I don't want to make an excuse of who I am. I want to win. And that's the basic premise of what I do in everything. I want to be the best. I want to win. But it's not because I want to show off to the world. It's because I want to show off to myself. I don't compare myself to Al Brooks or the Tims or Rose or you, Felipe, or you, Flavio. I compare myself to the person I was yesterday and the day before. And I think that comes with age. It wasn't always like that. I am on this drive to be a better version of myself tomorrow than I am today. And at times it's a strenuous way of living because you never really truly rest on your laurels. Your victories are just sort of swept under the carpet, and your losses are the ones that you're scrutinizing. But there's something incredibly satisfying by living that way, because you hold yourself to a standard that isn't reliant on a fellow human being. I don't want to be better than XYZ. I want to see how good I can be. And that I call is the warrior spirit. There's that spirit of screw what everyone else is doing and how well they're doing. Good for them. But just because they're doing well doesn't mean anything to you. It means that all the focus that you have, all the energy is focused on you. It's your life. You're accountable for every single piece of action and every single piece of outcome that happens in your life. Not your friends, not your family, not your mom, not your dad, you. And that's a rare quality in a human being, because most people will be quick to point fingers at somebody else or something else. And I think I was like that to some extent in my life earlier on, in my younger years. And I didn't like that person. I'll give you an example. Okay, so I was on a rowing machine, and you know, the rowing, and it's a good exercise, and I've had a really bad shoulder for a year, and there's a great way of training up. And instead of just doing the normal 10,000 kilometers that I know, 10,000 meters, sorry, I decided I'm just going to row a marathon. And I didn't make it. I didn't row all 42 kilometers, but I got more than halfway, at which point I had to admit I don't have anything left in the tank. I am absolutely spent. But I didn't tell anybody. It's not like I called my family and said, I've just rowed half a marathon. It was a personal victory. It wasn't for something to show off to the world. Look, I did that. No, it was just, well, I usually row 10,000 meters, and now I rowed 23,000 meters. I'm a better version of myself today than I was 2 days ago when I rowed 10,000 meters. And that becomes a way of living. Felipe, it's just it becomes part of your behavior. It becomes part of your psyche to question everything. And you're saying, well, what's my true motivation for doing this? Is it external? No, can't do that. It has to be internal. And so do you now begin to understand that that financial success that I have achieved as a trader isn't the result of listening to other people? Al Brooks is a great teacher, but Al Brooks won't make you a great trader. You will make you a great trader. It's you that will make you a great trader. Al Brooks can just be the catalyst for a greater understanding of the chart, but it's still you that has to press the button. And if you freeze because you trade a 5 lot and you're accustomed to a 1 lot, then Al Brooks isn't the problem. You're the problem. That's why I say that technical analysis as a concept is deceitful, because the brokers are making you believe that if you study charts, you'll make it. The whole YouTube sphere is geared towards, well, if you watch this video with this secret concept, you will make a truckload of money. All the podcasts, all, you know, it's all geared about, yeah, I know this secret pattern that I do, or this technique, or this, you know, liquidity crunch, liquidity buffer, you know, silver lightning. It's like, yeah, but that's exactly the same as Charles Petit walking this high above the ground. But you will not make money trading on 1 lot. You can't sustain a living trading on 1 lot, unless, of course, that, you know, you're like 10 years old and you have no needs because your mom and dad pays everything. But once you begin to have to pay mortgages and send kids to school, etc., you can't do that on a 1 lot. And so I realized that if I wanted to make it to the big time, you know, where you really have true financial independence, that wouldn't come from listening to somebody telling me about a moving average crossover or some secret pattern. And I'm quite open about my approach to trading, because I know, what have I got to lose? People still have to press the button. And so even though that I am offering techniques, means nothing without addressing the other leg of trading, which is you. And that's where 99% they fall off the cliff. They have absolutely no stability emotionally to withstand adversity.
I agree.
Should I clap, Flávio?
Always the part of the show that we ask every guest and legend that come here. What was your best trade? Not the most money, but the one that gave you the conviction, I'm the master of the game. And the other flip side, what was your worst trade? The one that almost took you out of the game.
Okay.
That's our signature question here.
My answer is going to surprise you.
Great.
The best trade I ever did was in 2000 and I'm going to go with 2007,
Okay.
2008. I was trading a 5-lot at the time, but it was the first time that I truly understood the power. And you know what? I can see the trade for me. And here goes. I'm going to try and explain it to you. The DAX made a low, and then it made a lower low, but then it closed above the high of the lowest bar on a 15-minute chart. Actually, it was a 10-minute chart. I have a name for that. It's called the fishing technique. My argument is that the market goes below the last low, and the lowest bar you can observe, when it closes above that, that's a buy signal. So I bought 5 lots. And then the market began to move my way slowly. And I moved my stop loss up to break even. And I bought a second 5-lot. And I put a stop loss down where the first one was. And the market moved a bit higher. And now I bought a 3rd lot. And now I could begin to get that sensation of, that's what Charlie DeFrancesca meant by adding to a winning trade. That's what David Paul meant about the power of adding to a winning trade. It's not about doing it because you want to make more money. It's about doing the opposite of what feels good and what feels right. Because most people that had bought down there, they would never dream of adding to the winning trade. Instead, they'll be thinking, right, I'm going to start making up targets and I'm going to take half my target. And then, if I risk 20 points, then I'm going to take half the position off when I make 20 points, and then I'm going to let the other half run. That's sort of the conventional way of thinking. But those mentors, they turned that on his head and say, no, don't do that, because if it feels good to do, it's probably not the right thing to do. Because as a general, Charlie DeFrancesca, he said, David Paul said, the right trade is the hard trade. And Charlie DeFrancesca said that a good trade defies human emotions. And so I think I added once more, and I can very clearly remember that I bought the DAX at 90, and then I added at 10, and I added at 20, and I got out at 48. And the profit wasn't big. It was something like $1,200–1,500. But it was the first time that I ever felt that taste of doing something perfectly. And so I felt like I had felt like that the whole world thought that the earth was flat, and I had just seen a physical evidence that it was indeed round. I felt so unique. I felt so relieved that I had had that experience. And from then onwards, it became all about replicating that experience again and again. And just so that the story actually is that when I sold, it just so happened that was the high of the morning move. And then the market retraced back. And I just felt like, wow, I practically just almost bought the low of the day. I added to the position on the way up. And then there was a double top. And I remember very clearly, Flavio, that I think that's a really important point to bring with it, is like when it came up to 48, there was a part of me that didn't want to take profit because, you got caught up in well, what if it goes to 58? But the plan was to get out at 48 because that's just how the fishing technique works. And if you're interested in the fishing technique, just Google it or YouTube it, and I have videos that explains it. This is not a secret how it works, not at all. But that was probably the best mechanical trade that I have ever executed, because it was just so perfect. I did everything right, and afterwards it felt wrong. I didn't feel good about it, because I felt, well, what if I had closed it and it would have gone further? And that to me was an enormous lesson about being able to take profit too, and then just accept that whatever comes. It was an enormous experience of both joy, but at the same time, depression, that you can never have the perfect trade, because you can always put a flaw on something you did wrong. You got out too soon, you got out too late, you didn't add enough, you didn't trade enough. And I think the whole journey of becoming a trader that can sustain making a living in the market comes from accepting that you will never ever be perfect. And every now and then you get lucky and you do buy the low and you sell the high, but that's like, a once in a blue moon. So that was my best trade, Flavio, and thank you for asking, because I smile remembering it, because I see it so very clearly in my mind's eye how I felt and what I saw, because it was the first of its kind.
Don't forget the worst trade, Tom.
The worst trade.
Just still on the best trades. I think it was in Los Angeles. You showed us the 72-week pattern setup in the pandemics, and you made like a kill. It was, I don't know, 30 times what you bet or something like that. You still think this trade that you just described was even better than that? Because guys, he sold like 1 week before the pandemic or something like that.
Yes, it wasn't 1 week before. It was a Friday evening, and a friend of mine who's a trader called me, and he said, I've been sitting counting on the software, and I think it's 72 weeks, but could you just check? And so I brought up my charting package that has a bar counter. And I said, holy smoke, how did I miss that? Yes, it is 72 weeks now.
Yeah,
and
just a little context. He has this setup, which he became kind of famous in London, if I'm not mistaken, of the 72 weeks. It's like a dumb setup, but that works for him, which he has like an interval of 72 weeks between a peak and another peak, or a low and another low, and that works for him. So that was just a little context for the audience that are not aware of that. Okay,
I made several videos. I've also traded a live call 72 weeks. So if anyone is interested in it, then all you have to do is YouTube that, and you will get quite an exhaustive explanation. As you can see here, I'm not actually keeping secret, because I think it was Richard Dennis that once said about the turtle traders. He said in the Market Wizard book, in the interview with Jack Schwager, he said, we could publish our trading rules on the front page of the Wall Street Journal. And then Flavio, you're nodding, yeah? You're nodding. And people would still not be able to make money from that technique. And I find that is so true of many techniques. Many brilliant techniques will still have failure rates.
This whole story is inside my book, so I wrote it very well.
yeah, but there you go. And so, we're all traders sat here in this ensemble, and so we all know the joy of winning, but we also know that losing is probably the thing we need to be much more mindful of, because that's where it can go truly wrong.
Yeah. I interrupt you. You were talking about your friend called you about the setup 72 weeks, and I just interrupt you. If you can just continue with that great story.
So you want to know my the loss that hurt the most?
Yes.
Okay.
The worst trade.
I have two.
Oh, okay.
The first one was when I started trading. I shorted the Dow, and then I added to the loser. I lost something like $2,000, which was a lot of money for me, and it really hurt. And I remember, this was back in the days when the margin call wasn't a phone call or automated. You actually got a letter saying you need to deposit more money on your account. The loss, the most recent loss that stung was during the pandemic. I had made about, well, I'll do it in US dollars, approximately more than $10 million shorting. And I gave a lot of it away when the market began to rally in April. A lot. I won't tell you how much, but it was enough to, it hurt badly. And
Adrenaline.
I had to take some time out from trading to understand what had happened. And I did, and I came back stronger for it. But I'll tell you, man to man, that was a loss where my family could tell that there was something wrong. Normally you would not be able to tell. I might be more silent or focused or concentrated, but there it hurt badly, I must admit. So that was my worst loss. So it came right after the biggest win financially. So should I start from the start? So you want to know what my best trade was, and I explained to you that it was a rather small trade, but it began to build a structure that laid the foundation for the wealth that I have built as a trader. But then I run a community, it's a free community on a Telegram channel, and I began to receive messages from people in the East. I remember very, very specifically that there was a doctor from Iran that contacted me, and he said, we have patients dying left, right, and center. And as doctors, we have no protection. And this happened before the market really reacted to it. And then my phone rang, and it was a really good friend of mine, a very competent trader too. And he said to me, I've been sitting looking at the news, and I'm trying to make that fit in with your 72-week cycle. And the 72-week cycle is this thing that I observed in the Dow Jones index over the last 30 years, that between big highs and lows, or lows and highs, or lows to lows and highs to highs, there's often 500 calendar days, which is 72 weeks. And so he said to me, can you not use your software and find out if that 72-week cycle is close? Because I'm counting manually, and I have this software, you can sort of, it counts the bars. And I said to him, it's actually right now. And he said, do you think that it would be a good idea to go short? And I said, I do. And so I put on a short position. It was a big position. And that weekend, the news got really negative. And I remember being in constant contact with him because he lives in another country. So the news flow was different. So we compared news flow from where I was with where he was. And then Sunday night, the market opened gap down, and it was just wow. And so that profit that I now had I used to compound my position, and I doubled up. And I would say that the next 2 months was this mayhem. I don't know if you remember this, but after the market had dived very hard for 2 weeks, it saw an enormous bounce, after which it dived again. And it, just because you are on the right side doesn't mean, or doesn't make it any easier to trade. And it was an enormous financial success, like a truly, like, I wouldn't say life-changing, because I've already built up a fortune as a trader by then, but it certainly was an amazing result to have in such a short period of time. I'd never made so much money in such a short period of time. But then the market turned very violently. The central banks, the Federal Reserve came in and basically sort of underwrote the market. But I was very slow to spot that. And I lost a lot of what I made. And it really affected me because, one, it affected me emotionally to see so much money going out of the door again. I like to think that I was immune to it, but I wasn't. Two, I was extremely, and this is more important, I was extremely disappointed in how I conducted myself emotionally. It was as if I chased an idea rather than chasing this. I have a friend, and he had a really big account, and he started shorting silver way too early. And then he blew the account, he put more money in, he blew that as well. And so by the time that silver actually corrected, he had no more money left. And I spoke to him at length about this practically every week and saying, yeah, but you where's the weakness that you are shorting into? And knowing who he is as a trader, and his hallmark is that he buys strength and he shorts weakness, but he's shorting strength. What I did was I shorted strength when the market began to bounce during the pandemic. And that was disappointing for me. It was a bit like I promised myself to stop drinking and then I started drinking again, or I stopped smoking and I started smoking again, or I promised myself to, eat a good diet and then I started eating junk food again. I was disappointed that I wasn't able to keep the promises that I'd made myself. But hey, I also want to point out something to you, that nobody's perfect, and I didn't want to be too hard on myself because I'm every bit as flawed as every other human being, and I'm just, what I say, I'm work in progress.
But come on, Tom, with that level of open profits you had there, to keep that for weeks, a position that size for weeks with that kind of open profit is like impossible for human beings. I mean, it's really hard to keep a position like that, right?
It is. You know what the best way to learn to trade is? Have positions on. The best way to learn to trade is to have positions on, because you won't know what you are made of and what your weaknesses are unless you actually have positions on. Only when you have positions on that hit that sweet spot. Sweet spot is not too big to make you emotionally stunted, but not so small that it doesn't matter either. That's the sweet spot. And the best way to learn to trade is to actually trade in the sweet spot, because you're always just being stress tested a little bit more.
We are almost the end of the show. And I say normal is a loser. A noble brain hopes a losing trade comes back and fears a winning trade will turn.
A normal functioning mind, Flavio, will not make it as a day trader. It is practically impossible, because the way that our the way that our brain is constructed, we will always seek the easy path. We'll always seek the path that expends as little energy as possible. And we will never, ever voluntarily seek danger or pain. But that's exactly what is required as a trader. And then you have to sit in it. You actually have to sit with the pain and the discomfort. And no normal brain will ever do that voluntarily.
So if you could teleport back to 1992 when you first arrived in the UK and give young Tom just one piece of technical advice and one piece of psychological advice, what would they be?
It would be this. Tom, this is what you're going to do. You currently trade one lot. Fine, trade one lot. But I want you to trade 30 trades. And then I want you to print out every single one of those 30 trades. And I want you to analyze them. And I want you to find out where did you go wrong and where did you go right? What's your strengths and what your weaknesses? Once you have done that, I want you to double your position size. And then I want you to execute another 30 trades. Then you go through the same process. You analyze these 30 trades. You find out what did I do right and what did I do wrong. Be unemotional about it. Be as cold as you need to be. But do 30 trades. This is an exercise that David Paul gave me. And then you repeat. You repeat. You repeat. And that is the only way that you will truly get to understand who you are emotionally and how it is that you react emotionally with the market. That's what I would have said to me in 1992. I didn't figure that out until 18 years later. Well, I got there in the end.
All right, so Tom, from what I understood, we're going to finish now, right, Flavio?
Yeah, the last
All right.
one.
All right, so I'm going to ask you. For the people listening who are tired of being normal and losing, where can they find you, your best loser wins, and how to watch you trade live?
If you want to see somebody navigating the markets live, warts and all, winners and losers, nothing edited, nothing polished, bad jokes as well every now and then, you can find me on YouTube. But of course, I hope that you will give me the honor of showing up in Sao Paulo so I can listen to your story, give you a handshake or maybe a hug, and give you some advice along the way as well.
Yeah, that's great. Guys, the lesson today is brutally simple. The market doesn't pay you for what you know. It pays you for how you behave when you are in pain. Tom has taught us that the only way to win is to embrace the loss. Tom, thank you for being a good loser with us today.
Thank you for your time.
Thank you so much, Flavio. Thank you for the invitation to be here. Thank you so much, Tom. And I hope the audience like it as much as I like it one more time to hear you talking.
Philip, thank you for your great questions and reviews too. And so, guys, you watched the film. Let's see Tom at the end of March in Sao Paulo. 28th of March is a Saturday, and he'll be alive there. So this is Flávio Lemos. This was Traders of the World today. Until next time, be patient, don't be normal, and be a good loser. Bye-bye.
Bye-bye.
Thank you very much.
Seems to be really orange. How am I coming through with you?
You are really orange.
Very orange. It looks awful. It looks absolutely awful.
It's almost Donald Trump.
Yeah.